Good morning, everybody. Good afternoon to my friends in Europe. Happy Thursday for everybody but a CPI reading. CPI is out. The inflation rate in September came in at 2.4%. That tops expectations by a good amount. Core came in ahead and by a decent amount. And, you know, that puts a damper on the whole. We're going to get another half point rate basis cut is what it comes down to. It's that simple. And with that being the case, let's take a look at how markets are reacting and what I think is going to happen today. Well, on the open, markets are down 18 points. The S&P is down 18 points. The NASDAQ is down the Qs are down $2. The Dow's down. So, I mean, across the board, down a teeny bit. Yesterday on Wednesday, we rallied about $40. We're giving about half of that away. And I don't think this CPI number is that big of a deal. The other number that was kind of interesting was Delta, and they came out and warned. And if Delta is warning, what does that say about the consumer? It doesn't say anything good. So it's kind of a 2 for 2, not great news this morning. So how do I play something like this? I think on the day, things might get worse before they get better. Just based on the trading. Obviously, I want to let things work themselves out. The first half hour of the day is for rebalancing positions. It's not for opening new ones. So that is something that I live by. But come 9 o'clock, 10 o'clock Eastern, I'm gonna be looking to see if there's anything to do. My gut says that we're gonna soften up. And folks, we've been watching. There's a few things in this market, and CPI might be a part of this mixture that are kind of causing people to go, I want to start with the bond market. And the bond market, the implied volatility on bonds, that's this red line down here, it has been exploding. And it is almost as high as it was on August 5th. And we're at all-time highs. What's the difference between August 5th and where we are now? One was a major sell-off, and one is a new all-time high. And yet bond vol is exploding. Next up is the VIX, which, similar to bond vol, has just gone up and up and up. I'm going to actually tighten this up to a 3-month chart to a 1 month so it's easier to see. And you can see, like, we had this big run up, and then since the 7th, when we had a decent sell-off, we've rallied pretty hard, and they have not taken vol down at all. And so coming out of CPI, and there, to me, I see downside. Maybe not huge, but markets are pricing in a major move. I don't think it's today, but they're pricing in a major move, and I don't think it's election related. I'm not even sure it's Iran related. But with that CPI number, let's have this big pop and kind of I mean, at least you would say this is a harami, but it's not because it's not a reversed. I just think that I think the market looks softer than it maybe appears to your average investor. And if you want to know what the market is going to do, you have to follow Apple because Apple is the market. Apple's down about $2 today. NVIDIA, after being down a little bit on Wednesday, is up today. Microsoft is down. Meta is down. AVGO is down. It's kind of an off hot stock day. Another big event that I want you to pay attention to that's upcoming is JP Morgan earnings tomorrow. JP Morgan reports tomorrow before the market opens. And, it's currently trading 214. They are pricing the move. Let's see. I can't. I don't know why they're not giving me the current implied move. Well, the strangle is currently pricing itself about $6, which is probably too cheap, given everything that I'm seeing in markets. All right. So there's just kind of my brief analysis of what I'm seeing in the market. From an action standpoint, what would I be doing in this market? I kind of laid out in my YouTube video yesterday. If you haven't seen it, go on YouTube and check it out. What I'd be looking to do. But I like the idea of near-term short premium and then slightly longer-term back spread. So I would sell a straddle for mid next week and then buy multitudes of options behind it the following week, something along those lines. And I like long November VIX calls. If you want Mark's simple, easy trade idea, it is buy November VIX calls. Because, like I said, I think there's some softness to what we're seeing here. All right, everybody. So there you have it. There's my reaction to CPI and how markets are reacting. Obviously, nothing huge, but I think there's more to this tale than just what came out in CPI, and there's more of this market. And there you have it. November VIX calls is the play. All right, folks, I am Mark Sebastian. I am your only option. I hope you have a great rest of your trading day. I will talk to you soon.